news coming in from the markets. The Nifty is down by 700 points. Sensex is down by 2,300 points. So the Sensex plummeting to 2,300 points. That's the latest that we are getting in on this stock market crash. In fact, one is getting to see the Sensex plunging to 2,300 points, which is a bit of a bad news there. There are several factors, but obviously the sentiment is really low because of what one is seeing on the markets. Mangalam Malu from CNBC TV 18 is joining us. So Mangalam, what is the reason? Is it because of the, what we are seeing in the Asian stock markets or the US recession fears? What's the cause for this crash? Okay, so that's what we're getting to hear right now, that there's been a massive crash and the kind of numbers that one is getting to see has really dampened the sentiment, with Sensex plummeting to 2,500 points now. The Nifty also quite low. Now, the big question is, what should investors do in this scenario? But there are a couple of reasons as a result of this crash. Asian stock markets have also seen a dip. They've also tumbled as a result of several factors, whether it is the US recession fears or, for that matter, even the rising tensions in the Middle East. Now, those are some of the factors which perhaps has led to the kind of crash, the kind of performance that we're seeing on the Asian stock markets. And that's probably why we're seeing the Sensex and Nifty in the red, both of them. Just take a look at those numbers, the Nifty down and the Sensex also down by 2,500 points. Trying and connecting to our reporters from CNBC TV 18 to understand the reason behind this crash. Okay, so that's the latest. The Sensex sliding more than 2,300 points. The mood obviously is far, far from upbeat. The sentiment is quite low. And one of the reasons that one is saying that the reason is because of the kind of performance that one saw at the Asian stocks. They have tumbled as well. Nikkei, in fact, has also fallen by about 8%. There has also been losses that has been witnessed at the Wall Street. And obviously that has had an impact on the Indian stock markets as well. So that's the latest. Sensex has crashed. Nifty is also quite low. Nifty has fallen 50 points. There's also been another big reason of unimpressive Q1 results. India Inc.'s June quarter results has also been a mixed bag. Mangalam Malu is back with us. Mangalam, tell us the reason for this crash. Is it because of the US recession fears or the rising tensions in the Middle East or the unimpressive Q1 results for this year? What is the reason for this kind of numbers that we're seeing both on Sensex and Nifty?
Well, the biggest reason, of course, is what's taking place in the US right now. Over the last couple of trading sessions, there were increasing murmurs that maybe the Fed has, increased or held on to the increased rates for a longer time than what the street was anticipating. And that led to US recession fears. That was overall, buoyed lower by the weakness in big tech earnings. So we had weak numbers coming in from Intel. The stock was down 26% on Friday. Weak numbers coming in from Amazon as well. That stock was down close to around 9%. And all of that led weakness to the sentiment, and as a result of which the Nasdaq fell 10% from its highs. Now, usually when an index falls 10% from its highs, it's said it's in the correction territory. All of that has percolated down to global markets. This morning, we saw one of the worst days on record for the Taiwanese index. The Japanese index also saw its biggest fall all the way since 1987. And it was only understandable that the Indian markets would face that heat as well, especially because it was just 2 days ago where the Nifty had hit a record high of 25,000 as well. Were we particularly cheap? Not so much, because we are 22 times one-year forward earnings, which also is at a premium to its historic levels. And like you pointed out, the first quarter earnings so far have been a bit of a mixed bag. So maybe as valuations were high, a lot of money was being made, the global environment looking a lot more uncertain, people thought it prudent to go ahead and reduce their exposure to especially these global facing stocks and stocks where a lot of money has been made in the past. So you have weakness in IT stocks, metal stocks, all of them which have a global facing angle, and then you are seeing some sell-off in a lot of these PSU stocks, a lot of these defense and rail stocks which had rallied anywhere between 100 to 200% in the last 12 months itself. There is flight to safety taking place in the consumption names, and a couple of these pharmaceutical names typically known by investors as safe havens. And we're also seeing the volatility index spike 40%. So there is a fair amount of fear in the markets right now. Where do we go from here is a question that we'll know only answers to from what comes about from the US market so far overnight. And as we speak, the outlook looks fairly grim as well. The Nasdaq futures down over 3.5–4% after the big decline that we've seen from current levels already.
Oh, absolutely. And huge amount of money has already been lost as a result of this massive crash witnessed across the globe, especially the Asian markets.